Today we're taking a look at ASX listed company Hawthorn Resources, ticker HAW, perform some technical analysis on it and make some predictions as to where we can expect to see Hawthorn Resources go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. Today we're checking out Hawthorn Resources. Their ticker on the ASX is HAW. Now they are a miner and an explorer, currently mining a bit of gold, looking if they can potentially perform an underground gold mining operation at their tenements in Western Australia. And they also have their fingers in another pie where it comes to an iron ore project. So if that tickles your fancy, make sure you do go and check out the company and do a bit of reading up on them. But today we are simply performing some technical analysis to try and make some predictions on where we can expect to see Hawthorn Resources go in the near future. Let's get into it. Welcome into the Hawthorn Resources chart, guys. As you can see, currently the value of a share for Hawthorn Resources is currently sitting at 8.2 cents. And if we zoom out just to, I suppose, get a better picture of where we have been in the past, back in May of 2008, you can see that Hawthorn Resources over here hit a lovely little high. And that high, if I can actually get the value for you guys, let's hover over that. That high was a value of 92 cents. Now obviously a lot has happened since that point in time, and from a long-term perspective, I don't think really what's gone on over here is too relevant to the technical factors currently at play. So let's zoom in and get a bit of a closer perspective of what exactly is going on right now. So I suppose the most recent high we saw was back over here in July of 2020, and that was a high of 18 cents. We also then had a bit of a pump over the past, I suppose, few months, and that pump got us to a value of over here on the 17th of November 2021, and that was a 12.5 cent high. So you can see that there's been quite a bit going on, and it's been quite an up and down chart. Now, the first thing I always like to do when I look at brand new charts is establish a trend. So I really want to see if we can establish a trend from, I suppose, a long-term perspective first, then we'll look at the shorter term elements. So looking at a longer term perspective, I'd be taking, of course, this top end over here and trying to lay a bit of a trend. And what we can see is we do have a trend. It is certainly a downtrend at this point in time, but it is one that is being tested. Now, from a long-term point of view, you can see that this line has three key touch points, I suppose. The first of which being up over here, the starting point. The second over here at a spike in December. And more recently, I suppose, the few that we're seeing over here over the past few months. So we're really seeing that this line is still in play. It is acting as a key point of resistance for this stock moving forward, but things are creeping towards it. Is there a bottom end for this? Well, I don't know if you could really put in place a channel per se, but if you had to, it would probably be, I suppose, a bit further out from the pricing point of view. And you know, the bottom end of that channel, really, you can't put anything real clear in place. So we're going to delete that line immediately. We'll leave this one here for the time being. And I'll zoom in and let's have a look at, I suppose, what's going on over the past few months. Now, interestingly enough, a few things occurred. We saw obviously a massive spike over here, and we got to a high over here on 12.5 cents, which is really, really good. That was a big spike. What that spike did cause though was a gap, and the gap that we are currently seeing is down here, and that was on the 11th of November to the 15th of November, and the gap started here, which was the day high at 5.6 cents, followed by the next day where the low was at a value of 5.9 cents. So really, there is a very small gap there. Will it be closed? I doubt it based on what's currently going on, but it is still there nonetheless. Now, interestingly enough, What we did see was, of course, the 20 and the 50-day moving averages absolutely smashed through the long-term 200-day moving average, indicating that overall the long-term trend has shifted. Now, in the shorter term, what we have seen is that 20-day moving average unfortunately crossed below the 50-day moving average due to this extended period of consolidation we have seen right here. Now, for those of you who watch my videos, you would know immediately what we have seen is a flag pattern form. And the flag pattern forms from basically where that gap is all the way up to the pole on that high at 12.5 cents over here. The top end of the flag, you could say, is this long-term trend line. But just for the sake of having a look, let's put in place, I suppose, a top end coming from the 12.5 point all the way down. Now, you can see that this point is probably more realistic for a short-term flag. And this is due to the fact that we have, various touch points all the way through. We had a false breakout over here on the 14th and 17th, I believe, of January over here before coming back down into that flag pattern. So we've got the top end of our flag. Now, the bottom end of our flag, I would suggest, is exactly where we're sitting at this point in time. And we've got 3 touch points, once again, on that bottom end of the flag. Now, we're sitting at that. That is at that 8.2 cent mark. So, what does that mean? Well, it means for the short-term price action, we're likely going to see a bounce off of this bottom end line over here. And supporting that furthermore is we clearly have a little bit of a gap over here by the looks of things. So what I'm expecting to see is, obviously we've had the price action moving here, consolidating over a period of time. I'm expecting to see a bit of a bounce and then a test once again of the top end of this flag pattern. And that top end would be roughly sitting around the 8.9 cent mark within the next few trading days. So I'm expecting that is what we're going to see. Worst case scenario, of course, this bottom end unfortunately does break, but I can't foresee that being, I suppose, a major possibility. I'd say that is worst case scenario and more unlikely than anything else. Let's zoom in as well on, of course, our volume. Now, it's hard to see given the fact that we have had this huge spike here, but if we get rid of that spike, what you will notice is overall, whilst yes, there have been days where there's been basically no volume at all, the overall trend for the volume is moving downwards, and that is consistent with the consolidation we're seeing. And it's coming to the point in time where we're getting to the pointy end of this flag pattern, and we're seeing obviously the sellers starting to drive up, and a little bit of good news could simply allow us to break out of the flag pattern and hopefully retest once again this overall long-term downtrend we're seeing. So I'd suggest, based on what we're seeing here, that is the likely scenario, but we need to consider a few more factors, of course. Let's have a look at the RSI. Having a look at the RSI, we can see that it has been dropping since our peak, and that peak, of course, pushed us into that overbought range, as you'd expect with a run of that type of scale. We hit a high, and that value was 85.12 on the RSI. Currently, we're now sitting at the lowest point we have been over this entire consolidation period, and the RSI is sitting at 38.35, which is consistent with the pricing action that we are seeing at the moment. Now, let's have a look at the MACD as well. Bring up the MACD. What we can see is we have had, I suppose, shallower periods of ups and downs as we do continue to see this consolidation occur. We're at a point now where an indecision point has really happened. We're now at a point where the buyers and sellers are watching to see what they need to do. That is why the volume is so low at this point in time and why these periods are so shallow. The buyers and sellers are basically even. Now, we did have a cross of the 12-day EMA below the 26-day EMA when we saw basically this gap form itself, and in fact I'm going to put in place just a little something so we can see how that gap has formulated itself. There's a gap there, but Now, what we're hoping we're going to see is this 12-day EMA basically sweep up and cross above the 26-day EMA. That in itself, given the place at where we're at on this triangle pattern, or this flag pattern I should say, is enough of a catalyst to potentially shoot us in an upwards direction, up this way, and towards that overall long-term downtrend. So, if I was trading this stock, I would be very closely watching the MACD at this point in time for a cross to potentially occur. All in all, where does that leave us from a price prediction perspective? Well, simply, I think my price prediction on a short-term basis is certainly a test of the 8.9 cent mark. And if we see the MACD cross convincingly and the buying volume does come in, then we will go for that overall long-term downtrend. And that really is sitting at about 9.8 cents. Is that realistic? In my opinion, yes it is, absolutely. We're only sitting at 8.2 cents at this point in time, so it is certainly not a far leap to get to that point. That wraps up today's analysis of Hawthorn Resources, guys. I'd love to hear your thoughts down in the comments section below on the company. Where do you think it's going? What do you think the potential of it is? And of course, if you enjoyed today's technical analysis, make sure you do leave a like and subscribe and turn on those bell notifications as well if you want to see more of this sort of content. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.